Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla's TSLA share price and where it's headed in the future. We'll be going over their latest news updates as well pertaining to Tesla's near-term catalyst where they're planning to build a production facility in Indonesia according to Bloomberg. We'll also be talking about how Tesla stock is loved and hated at the same time and where the future share price could be headed during the year of 2023. While also talking about their future financial projections regarding how their earnings per share could drop by around 25%, which of course will weigh down their overall share price. Lastly, we'll end the video by talking about 3 reasons why Tesla stock could actually keep falling, as well as my own personal rebuttals to these 3 reasons that are listed by the article's author. So for more videos on Tesla's TSLA shares and the company in general, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Tesla, as you know, is an electric vehicle manufacturer, but they are much more than that considering that they also operate and specialize in energy generation and energy storage. Right now, the current share price trades for $123 per share, while professionals believe the company could surge up to $218 over the next 12 months. Tesla recently, according to Reuters, signed a preliminary deal to build a production facility in Indonesia with the capability and capacity for that facility to create 1 million electric vehicle units, as reported on Bloomberg News Wednesday. Tesla makes electric vehicles in its gigafactories, which it currently has multiple gigafactories in various places around the world, such as Shanghai, Austin, Berlin, and Fremont. However, they are set to announce another new factory in Mexico. The chief executive officer of Tesla, which is none other than the famous Elon Musk, said back in November that South Korea was among its top candidates to also place another factory so they more effectively can infiltrate the Asian electric vehicle market, according to South Korea's presidential office. Tesla has signed contracts worth around $5 billion to buy materials for their batteries regarding nickel processing companies in Indonesia. The president of Indonesia also urged Tesla to not only make their gigafactory there to produce vehicles, but also a battery factory in the country. So overall, I would say this is a very positive development for Tesla because Tesla has a huge advantage over their competition, not only in technology and first mover advantage, but their greatest advantage is actually their manufacturing capacity due to these gigafactories. So where could the share price be headed, at least in the short term? Well, look, the author of this Barron's article suggests that the investors should focus on the fundamentals of the company, such as its expected earnings, which we will talk about in the next article, as well as their overall free cash flow, rather than just being swayed by the opinions of others or the company's CEO. So you clearly need to do your own research. This article also highlights that the electric vehicle market is growing and that Tesla's competitors and competition are investing heavily into their electric vehicle segments. The author also says that even in the worst case scenario where Tesla loses market share and it decreases in the future, Tesla could still be a very successful investment because as long as the overall electric vehicle market continues to grow, it doesn't matter if Tesla's particular slice decreases, because if the overall market continues to develop, that is still a good sign for Tesla. It means their share that they have will also grow as well. So they don't necessarily need to break new ground, they just need to stay competitive as the overall market grows. But what about a negative catalyst that is coming up? Well, apparently, there is more downside to Tesla stock, at least in the short term. The article's title is Tesla stock has more downside ahead and investors can expect a 25% drop in earnings in the coming quarter amid price cuts. Essentially, in the short term, we could see the TSLA share price fall even further, and I've said in previous videos that I think the overall share price could drop below or at least around $100 per share. And if it drops below $100 per share, that's when I will actually start to add to my overall TSLA positions so I can build up and lower my overall average cost for this company. So Gene Munster clearly believes that there is a further downside in the stock, as well as I believe that same thing. However, Munster is still bullish on the long-term achievements that Tesla could actually grow into. So he believes that the shares are actually undervalued right now after the brutal sell-off that Tesla and many other companies experienced during 2022. So even at the current share price, he believes that it's a good buying opportunity, but the share price could drop even further, at least in the short term. And I 100% agree with him. It doesn't mean that Tesla is a bad company. It just means that in the short term, due to macroeconomic headwinds, the share price of Tesla and the overall market could drop even further. So now let's highlight three main reasons why this could be the case. Like we said, Tesla, along with many other stocks, have fallen pretty dramatically throughout the year of 2022. However, it begs the question, is this overall decrease in the share price of Tesla and the overall market justified? Well, let's look at three reasons why it may be justified, at least in the short term. The first reason is that Tesla had weak delivery numbers in 2022. And hold up, I'm actually going to disagree with the author here in the sense of the company produced 439,701 vehicles during Q4, while they delivered 405,287 vehicles. In my personal opinion, that is not a huge weakness in deliveries, and if anything, if we look at their full year deliveries of 1.31 million deliveries, that's actually an increase of 40%. On top of that, production grew by around 47% to 1.37 million. So overall, I would disagree that we experienced quote-unquote weakness during the year of 2022, which would justify the overall share price falling. I don't think that is the factor. Instead, I would actually agree with his second point, and that was the Twitter fiasco. And the author elaborates that there's no coincidence that the share price of Tesla stock has fallen by around 46% since late October, to where the CEO Elon Musk appointed himself and bought Twitter, which is a very well-known social media company. The reason this concerned investors is that the CEO's time is already split between Tesla, SpaceX, Neuralink, and the Boring Company on top of Twitter. That's why many investors are very relieved to hear that he's trying to find a quick replacement for the CEO of Twitter, but he believes that whoever he picks as the CEO of Twitter is going to do a phenomenal job. So at least in the short term, this is going to cause some volatility in the share price such as it has, but overall, investors should remain confident that Elon Musk's main focus will be back on Tesla. It honestly all defaults back to investor confidence, and as of late, there's been a lack of investor confidence in the stock as the share price has continuously fallen downward. I actually think this is good news because Tesla was extremely overvalued, being valued at over $1 trillion at their peak, but now it's trading at around $375 billion for their overall market value. I do believe, like I said earlier, that the share price will fall below $100 per share, but ultimately that is going to be a good thing. It's going to allow very bullish investors to lower their average cost basis, and it's going to give them more upside once Tesla returns to that $1 trillion valuation in the future. Lastly, the article highlights that the economy is weighing on Tesla's shares, and I 100% agree with him on this factor as well. Clearly, the macroeconomic environment, which has created multiple headwinds such as rising inflation and increasing interest rates, have all caused electric vehicle companies as well as innovative technology growth companies to fall in their share price. Inflation has skyrocketed over the last year to 40-year highs, and to catch inflation, the Federal Reserve is trying to increase interest rates to where interest rates are now at their highest level out of the last 15 years, and the Federal Reserve is anticipating to increase their overall interest rates until they meet a nice prime rate between 5% and 5.5% during the year of 2023. The combination of higher prices and rising interest rates as well as inflation has caused consumers' budgets to take a huge hit. That means brands like Tesla and luxury brands are going to be hit very hard because people are not going to want to buy new vehicles, they're going to want to buy used vehicles because their budgets have been negatively impacted. Recent data also suggests that even the wealthier consumers in the United States seem to be cutting back on their overall spending, which would mean less eating out, less buying goods and services that they don't need, and ultimately this leads to a lower economy and a lower GDP. But this then begs the question, is Tesla's TSLA shares a buying opportunity right now? And the answer, as always, is that it depends. It depends on things such as your age, what type of investor you are, your risk tolerance, what you think of the company, how much research you've done, and many other factors. Back when Tesla was trading at around $400, people didn't believe me when I said that the share price was overvalued and eventually would pull back, and now we are seeing that exact prediction come true, to where now shares are selling for around a 70% discount from their highs. Now, does this mean that right now is a good time to buy buy Tesla? I actually think so, but some people would point out that they still have an extraordinarily high price to earnings ratio of 38, which is definitely not cheap because the S&P 500 index currently just trades at 20 times their overall earnings. But if Tesla can fall to around $100, that again is going to make this a very good buying opportunity. So I conclude and agree with the author's article, which says that ultimately for investors who can afford and stomach the volatility of the TSLA shares, Tesla stock is still a significant company to hold in your portfolio, and the TSLA share price could be low enough to offer you huge potential upside in the future. So overall, I would say it would be a buy rating considering the current share prices, and depending on what type of investor you are, this would be a buy rating for long-term investors who want to hold this company over the next decade. But I would love to hear your thoughts down below. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.